Salam, everybody. This is Investor Sheikh back at it again with another video. And in today's video, I want to talk about ETFs, or exchange traded funds. Essentially, an ETF is a way for you to invest your money into a variety of stocks as opposed to buying individual stocks from a certain company. Now, if you've been watching my channel, you'll know that every week I upload a halal stock pick of the week, which is usually an individual stock. Now, if you're new to investing, or if you're someone that is a bit cautious on where your money is going when it comes to investing, I would not suggest purchasing individual stocks, as they tend to be more risky. So, an ETF is an exchange traded fund that is a type of security that tracks an index, sector, commodity, or other asset, but which can be purchased or sold on a stock exchange, the same as a regular stock. An ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. ETFs can even be structured to track specific investment strategies. And a well-known example of an ETF is the SPDR S&P 500, ticker symbol SPY, which tracks the S&P 500 index. Now, the S&P 500 consists of 500 of the largest American companies. So essentially, the S&P 500 is a way to invest in the United States. And another well-known ETF is ticker symbol VTI, which tracks the stock market as a whole. So if you're somebody that does not want to pick and choose which stocks you want to buy, an ETF would be a more secured way of investing your money, because that money is going to be spread over a large variety of stocks. When it comes to individual stocks, they are pretty risky, but I would only suggest buying individual stocks if you are knowledgeable on that company and what they do, and you're confident in their ability in the long term. That confidence will benefit you more in the long term. So do not buy random stocks just because I'm talking about it or any different YouTubers are talking about it, because if you lose your money due to that company not doing so well, don't come blaming us for it. So again, if you are new to investing, or you're somebody that is pretty concerned of not sure which companies you want to invest in, I would suggest an ETF, because it's essentially a basket of stocks. Now, there are different types of ETFs that I want to talk about. So the first one, which I mentioned earlier, is the index ETF, which tracks the S&P 500 or NASDAQ. And you know, NASDAQ is typically the tech stocks. The second one is commodity, which tracks a commodity like gold, oil, corn, and even cryptocurrency. Now, when I talked about the stock GBTC, that tracks the price of Bitcoin. So if Bitcoin goes up, GBTC goes up, and vice versa. An inverse ETF is a bit risky, because it is designed to profit from a decline in the market or index. So if there is a crash in the tech industry, you would benefit from it if you owned shares of an inverse ETF. So like an inverse NASDAQ ETF would go up significantly if there was a crash in the tech stocks, or NASDAQ essentially. The fourth one is an actively managed ETF, which is designed to outperform an index. And an example of that is the ARK Invest ETFs like ARKK, ARKQ, ARKG. Those consist of stocks that are chosen by the ETF manager, and they're constantly buying and selling shares of the companies they own on a daily basis. And yes, they are designed to beat the market at the index average, which tends to be about 5 to 10%. They want to exceed that, maybe even go up 100% gains in a year. But those are also risky too, so that's something you have to be aware about. Industry ETFs are designed to provide exposure to a particular industry like oil, tech, pharmaceuticals, etc. And the foreign market ETFs are usually track non-US markets. So there'll be an ETF for the Japan exchange, the Hong Kong exchange, London exchange, Toronto exchange, that will track the markets of a different country. So if you want to invest in China, Europe, India, Japan, Canada, there will be an ETF that will track the markets there. And that's a way to get some exposure into the international markets. So all in all, an ETF is a great way to build long-term wealth, because some stocks that are in the ETF may do well and some stocks may not do so well, but usually those that do well will probably make up for the stocks that aren't doing so well. So that's why there's a benefit when it comes to diversifying your assets. And one way to diversify your assets is by buying ETFs. This is Investor Shake checking out. Be sure to check out my halal stock pick this Sunday so I can show you some ETFs that I'm looking at right now.